Hi, this is David of Bionic Turtle. Welcome to video 9B, which is the second of 3 videos devoted to the topic of current issues in the 2012 FRM. That's part 2. And so we continue with assigned readings, 2 chapters. First, toward operationalizing macroprudential policies published by the IMF, and then a reading on the collapse of the Icelandic banking system. And so first, with respect to macroprudential policies and systemic risk, there is some setup here in regard to some of the entities that could provide oversight or protection against systemic risk. First, the U.S. Financial Stability Oversight Council, FSOC, established under the Dodd-Frank Act and charged with identifying threats to financial stability, promoting market discipline, and responding to emerging risks to the stability of the U.S. financial system. And that FSOC would have a committee structure, including a systemic risk committee. In regard to monitoring, the systemic risk committee is responsible for identifying, analyzing, and monitoring risks to financial stability and providing risk assessments. The FSOC focuses on significant market developments, such as mortgage foreclosures in the United States and sovereign debt developments in Europe, as well as structural issues such as the reform of the money market mutual fund industry. Policy tools that are owned by the U.S. Financial Stability Oversight Council include the ability to designate non-bank financial companies for consolidated supervision, the ability to designate financial market utilities and payment, clearing and settlement activities as systemic, requiring them to meet risk management standards. 3, recommendations for stricter standards for the largest, most interconnected firms designated by the FSOC. 4th, the ability to recommend breaking up firms that pose a grave threat to financial stability. And 5th, the ability to recommend that Congress close specific regulatory gaps. Now, another entity, the UK Financial Policy Committee, FPC, expected to be established by year-end 2012 and will contribute to the Bank of England's financial stability objective by identifying, monitoring, and taking action to remove or reduce systemic risks. In monitoring financial stability, the FPC will identify emerging risks and vulnerabilities and cyclical imbalances using a broad range of indicators. Policy tools. The FPC will be able to make recommendations on a comply or explain basis to the future Prudential Regulation Authority and Financial Conduct Authority on their rules and policies. Instruments could include recommendations or directions on disclosures with regard to several issues, including the issuance and structuring of securities, trading infrastructure of markets, limits on large exposures, shadow banking rules. Cyclical instruments could include counter-cyclical capital buffers, varying liquidity requirements, varying capital risk weights, and minimum haircuts for specific types of secured lending. Then we have the European Systemic Risk Board, ESRB, an independent EU body responsible for the macroprudential oversight of the financial system within the European Union, established in 2010 and contributes to the prevention or mitigation of systemic risks to financial stability in the EU. In regard to monitoring and pursuing its function, the ESRB collects and analyzes all relevant and necessary information and identifies and prioritizes systemic risks. It provides the European supervisory authorities with the information on systemic risk required for the performance of their tasks. In collaboration with the European supervisory authorities, the ESRB will develop a common set of quantitative and qualitative indicators, quote-unquote, a risk dashboard to identify and measure systemic risks.